At the FTSE100 today, and this is my technical and semi-fundamental analysis. We'll look at some data as well. So let's start with the daily time frame, which is this chart here. We've got about two and a quarter years worth of data showing now. As you can see, for most of the decade, FTSE's been range bound, riding and crossing the 50 and 200 EMAs until we get to this point, which is obviously the coronavirus pandemic, and then leading into the current stage. Now, the coronavirus pandemic, the sell-off was obviously great across many global indices. As you can see, we made multi-year lows, in fact 9-year lows, down at 4762, which is down here. If we zoom in to look at the recovery that followed, we've got the initial bounce, which again was fueled by stimulus, fixed income dropping greatly with no greater investments to be found. So people pushed into stocks, and this is your recovery here. Since then, it's clear to see the recovery is slowing now. So we've got this arc forming. And this is where I think opportunities lie here in the current daily rollover, but also intraday trends that should continue to form. And I think this is where most trading opportunities arise. So what you've got is the higher time frame bias for me is bearish. You've got the 50 EMA closed below the 200 now, and it's riding there nicely. You've got price bouncing off the daily 50 EMA, which we can see here with the white line being the EMA in price. And these waves are predominantly bearish in my opinion. You've got lower highs, a couple of lower lows with double bottoms, and obviously support trying to be broken. And for me, this shows bearish pressure. If the lows are breached once more, so the 5800 level, I think we can see more downside to come, which I'll talk about later. But primarily for a higher time frame bias, this is bearish to me, and there's no real reason why it isn't, especially from fundamentals, and I'll look at that later with you. If we go to the 4-hour chart, so that now we're getting to intraday territory. Let's get that up, if it lets me. There we go. We can see these waves in a bit more detail. Obviously they look slightly messier, but here you've got your down, your up, your down, your up, your down, and predominantly we're moving downwards. Obviously it's getting slightly more sideways now, but we're moving downwards, and this is that bearish pressure you can see. And this is more of the time frame that I'm looking at trading right now. It gives you good risk reward. You're catching many points, but at the same time you've got that higher time frame bias to support you. So if we go to the most recent couple of waves on this chart here, you've got bearish wave, pullback, bearish wave, pullback, but at the same time the 50 EMA, much like the daily, is remaining below the 200, so the alignment is still bearish as well. And this is what you need to look at for me, is although it may look slightly messy, the underlying tones are definitely bearish. And if we look at specifically the last wave now, you've got your swing high point here, your swing low point, and if we apply the Fibonacci retracement levels, which we can do to previous ones as well, let's quickly do that. You can see that the retracements tend to appear around the 0.618 level, with 0.786 rarely being touched, but it's there as extra resistance if needed. And if we look at the current wave, exactly the same things happen. 0.618 is where we are now. The 0.786 fib hasn't been touched, but it's there if it's needed. And I think from the current point where we're at, I think we're going to see price roll over to the downside, especially in the near term. So on this specific counter trend pullback, if we go to the 1-hour time frame again to see it more clearly, we've got a break of the counter trend line, which is bullish. You've got your bullish counter trend here. There's clearly intraday resistance at this 6035 level, let's call it. There's no need to be too accurate. And obviously early this morning, we saw a nice sell-off, price dropping approximately almost 70 points. which is quite a nice sell-off. And what that's done, more importantly, is broken the 50 EMA, which has previously been supporting price, as you can see, but it's also broken this counter trend line. And I think if we look at price coming into the next, well, the rest of today and tomorrow, I think this may be where the next trade opportunity appears. So if we get a little predictor up, let's draw something. This is the kind of scenario I want to see, is price rejecting the 50 EMA here, testing it, pulling back into this big order block where we've got lots of price action and lots of orders and activity. So price coming up into one of these two zones and then hopefully making a lower high and coming down. And then what we can do is trade this new intraday trend. And what I would ideally do is sell the pullbacks. That to me is the smart move. Obviously, here's probably your best entry at the next retracement and the next test of this zone, and then just ride the waves if they appear. We are looking more bearish on this time frame. Obviously, price action is choppy on the FTSE right now, especially with the pound and Brexit and the government itself failing to make a clear path. But I think bearish undertones from the higher time frame will make sure that this trade has a good probability of success. If we're looking at price targets, let's just clear this up. I think a good zone, or the good zones to look at, let's go back to the 4 hour as well, is to look at firstly the 5800 level. Previous support, you've got 1, 2, 3, well, multiple tests of this zone. That is always going to be your first target, because if it doesn't break, chances are it's going to come back up, and again we'll see some more sideways action. But still, that's a good maybe 200 points from where we are now, which would be a lovely position to take, just down to that level. However, as I've pointed out, you've got your lower highs here, so if this level does break, then a lower low could be next, and then we're looking at some nice profit here. So the future targets, again, using Fibonacci, you can use extension zones as well. So we've got the 0.272 and the 618 extension zones. These will be your next targets. I've rounded this one to the whole number. So if we're looking at price coming down to these zones, then there's potential for obviously 500 points or so, which would be very good. And that would be my future target. So you've got target 1 here, target 2 here at the extension, and then longer term there. I don't see why especially the 5680 level and even 5500 can't be achieved over the next few weeks, because again, if we go back to the daily time frame, price is sat and trying to reject the 50 MA right now, but that's not actually that far away. These 3 points that I've marked are not actually that far away, and they're nowhere near the lows of the year. So if 5800 breaks as a support, I can see price going down to these levels, and they're definitely ones to keep an eye on. If we look at fundamentals, I use a few things for fundamentals. Obviously, the news is one. It's clear to see that the UK economy is struggling. If we go to, I use a data provider or research provider called Oxford Economics. They're primarily institutional, but they're very good. Their latest article on the UK itself, as we can see, the jobless rate, LFS jobless rate, has risen to 4.5%, very unhigh, and the unemployment picture is set to worsen further. If we go down to the charts, you can see that the unemployment rate is bouncing, and that is worrying. So if you look at the growth just in 2020 alone, if you say 2021 is going to be the same or maybe slightly less, you're going to be looking at the 73% level, which is huge. Employment rate of 73, unemployment, it's big. Another thing I like to look at is the FTSE100 retail data. So this is all positions taken from IG's retail platform, and at the moment, as of today or right now this morning, 60% of their retail clients are net long. Now, it's quite good to take a contrarian view to this, in the fact that the average broker, 75% of retail traders lose money, so you can use this as an indicator to be on the opposite side of their trades. So 60% are net long. Taking a bearish view is not necessarily a bad thing. I mean, the majority of retail buyers are buying FTSE. Short positions are probably a safe bet. So to have that on the backside of the technicals itself, I can't see why, if we can maintain a lower high at 6020, 6035 and trade price down, I can't see why we're going to be at 5800 by the end of the week, quite possibly. And again, if that level breaks, then let's just go back to the 4 hour. These are your two targets for the downside. And that is that. Thank you very much.